Great to see you again today, and thanks for opening up this video.
Today, Harry and I are going to tell you a little bit about what it is that you're actually investing in when you invest in the stock market. Harry, the other day we were meeting with a new client who was not convinced that now was the best time to be investing in the stock market. Can you tell our listeners a little bit about how that conversation went?
That's right, David. Our client was insistent that right now is a terrible time to be an investor. He gave about a half of a dozen reasons why, and none of the reasons he listed were that far-fetched or unrealistic. He didn't have any conspiracy theories or worries about nuclear war or government overthrow. The truth is, most of his reasons were rational. From valuation concerns to political turmoil to negative interest rates to trade wars and even real wars.
So what did you tell him, Harry?
Well, after patiently hearing him out, I replied that despite all the bad things going on in the world, that is still a good time to be an investor. If you look back over the past 50 years, we've had wars, terrorist attacks, runaway double-digit inflation, trade wars, impeachments, poor economic and tax policies, geopolitical instability, crippling recessions, high unemployment, and at times chaos and uncertainty. Yet despite all of this, the market has continued to go up.
And why is it that the market continues to go up despite all of this bad news?
Because all of these things are temporary. Bad leaders are temporary, wars are temporary, high unemployment is temporary. Almost everything in the news that worries us today is temporary. What's not temporary is the desire to create better technology, the need to find cures for disease, the hunger to improve one's life, the desire to better one's financial standings. These are the core needs that drive people all over the world in their everyday lives. As an investor, you are investing in human potential and our insatiable desire to improve our quality of life.
When you invest in the stock market, you're investing in companies, but more importantly, you're investing in the belief that people want to wake up every day and create new products and services that solve problems and make lives better. Recessions will come and go, leaders will come and go, companies will even come and go. But progress will always continue despite inevitable setbacks and hurdles that happen from time to time. Events will happen that upend the stock market. Some of their causes foreseen and others that will take us by surprise. In the short term, the stock market reacts to these events, but as long-term investors, they're meaningless. Being a successful investor is about being able to distinguish between what is important and what is not. The reality is that while the 6 o'clock news is captivating, it's also irrelevant when you're investing for decades. This chart shows the growth of $100 invested back in 1960 in the Canadian stock market. Despite all the events over the years ranging from economic crisis to wars and terrorist attacks, the market has averaged 9.5% over the last 60 years. If your grandpa had invested $100 in the stock market back in 1960 and had resisted the urge to trade in and out of the market based on bad news, his $100 would be worth $19,000 today.
The point of today's video is that there is never really a bad time to invest in the stock market, provided you have time on your side. Certainly, there are better times than others. For instance, if I had $1 million sitting in cash back in 2007 prior to the last financial crisis, I'd have rather invested it early in 2009 than late in 2007. But if my investment time horizon was long enough and I didn't need to spend any of that $1 million for 20 to 30 years, it really won't end up making much of a difference to my portfolio 20 or 30 years from now. As always, when investing money, the most important thing to determine is how much of your money do you need to spend in the next 2 years, how much in the next 5 years, and how much in the next 10 years, and to structure your investment portfolio accordingly. Not all your money needs to or even should be invested in the stock market, but for a portion that is, try not to let bad news headlines distract you from your pursuit of long-term compounding growth.
Thank you for taking the time to watch today's video.
And as always, if you have any questions for David and I, please don't hesitate to call. We'd love to hear from you.
Take care and have a great day.